If you're sitting on 10,842 HBAR today, you're probably asking yourself, will this stack actually pay off by 2026, or will it just sit in my portfolio like dead weight? Hedera isn't like most other cryptocurrencies. It isn't even a blockchain. Instead, it runs on something called Hashgraph, a completely different approach to distributed ledgers that promises speed, security, and low fees at a scale blockchains struggle to match. The question is, will this technology break through and take Hedera into the top tier of digital assets, or will it remain a niche project? Let's dig in. But first, a quick note. If you're trading crypto and want an exchange I personally trust, check out WEEX. It's got deep liquidity, ultra-low fees, and a wide selection of coins. Right now, you can claim up to $30,000 in sign-up bonuses and trade with 400x leverage, all with no KYC required. The link is in the description. Now back to Hedera. At the time of recording, HBAR trades around 24 cents, with a market cap of about $10 billion. That already makes it one of the larger projects in the mid-tier altcoin space, but Hedera's vision isn't just about being another coin. It's about becoming the backbone of enterprise-grade applications, tokenization, and even national infrastructure. Let's break down what makes Hedera stand out. Unlike Ethereum, Cardano, or Solana, Hedera doesn't use blockchain at all. Its Hashgraph consensus is based on a gossip protocol where nodes randomly and quickly share data with one another. This allows it to achieve thousands of transactions per second, with finality in just a few seconds, and fees that cost fractions of a cent. For businesses, that's a game changer. A global bank or supply chain platform doesn't want unpredictable gas fees or long confirmation times. They want something reliable, fast, and cheap. Hedera provides exactly that. This is why Hedera has been able to attract massive real-world partners through its governing council. Members include Google, IBM, Boeing, Standard Bank, Dell, Ubisoft, LG, and even universities. Each council member runs a node on the network and helps govern its development. This creates a level of legitimacy most crypto projects can only dream of. But governance alone doesn't drive value. Adoption does. So where is Hedera being used right now? One standout example is Avery Dennison's Atma.io, a supply chain platform that tracks billions of items using Hedera. This isn't theory. It's live, in production, with data being processed on the network daily. Then you have carbon markets like Dovu, which are building tokenized carbon credits on Hedera. With the world pushing toward ESG compliance and carbon accountability, this use case could be huge. Financial tokenization is another frontier. Hedera has been working with banks to tokenize assets and currencies. If this scales, Hedera could end up being the quiet infrastructure behind tokenized securities, commodities, and stablecoins. So, where does this leave HBAR by 2026? Let's map out some possible price scenarios for your 10,842 coins. At just 50 cents, HBAR's market cap would be about $20 billion. That makes your stack worth $5,421. A modest gain, but very realistic if adoption keeps progressing. If HBAR reaches $1, that's around a $40 billion market cap, putting your 10,842 HBAR at $10,842, a neat doubling of your portfolio. At $3, Hedera's valuation would soar to about $120 billion, making your holdings worth $32,526. This would put HBAR among the top digital assets, signaling that enterprise adoption and tokenization had taken off in a big way. If the coin reached $5, that would be a market cap around $200 billion, and your stack would jump to $54,210. This kind of growth would likely mean Hedera had become a critical backbone for industries like banking, supply chain, and sustainability tech. And in the most aggressive bullish case, if HBAR ever touched $10, you'd be looking at a market cap of $400 billion, and your 10,842 HBAR would be worth a staggering $108,420. That's the moonshot scenario, achievable only if Hedera captured significant global adoption across multiple industries. Now let's flip the coin and talk about risks, because as much as Hedera has potential, it also faces big challenges. First is competition. Hedera isn't the only project chasing enterprise adoption. VeChain, Algorand, Cardano, and others are also targeting businesses and governments with scalable, low-fee networks. Hedera's Hashgraph technology may be unique, but it will need to keep proving it's better than the alternatives. Second is centralization concerns. While the governing council provides credibility, some critics argue it makes Hedera less decentralized than other crypto networks. If too much power stays concentrated with large corporations, it could put off parts of the crypto community that value decentralization above all else. Third is ecosystem growth. Hedera has excelled at enterprise partnerships, but retail adoption has lagged. DeFi, NFTs, and gaming are exploding on other chains, while Hedera has been slower to gain traction there. For HBAR to reach higher valuations, it may need to capture both the enterprise and retail markets. That being said, Hedera's credibility is unmatched in the crypto space. Having Fortune 500 companies and global institutions not just as partners, but as actual governors of the network sets it apart. Combine that with live use cases in supply chains, carbon markets, and tokenization, and you've got a project with real-world legs. So, let's recap your 10,842 HBAR by 2026. At 50 cents, it's worth $5,421. At $1, it's worth $10,842. At $3, it's worth $32,526. At $5, it's worth $54,210. At $10, it's worth $108,420. In a bearish case, if HBAR fell to 10 cents, your stack would still be worth $1,084. By 2026, Hedera's future will depend on how fast real-world adoption accelerates and whether its unique hashgraph technology proves itself as the better alternative to blockchain. If it succeeds, your HBAR stack could be worth far more than you expect.